G'day folks, welcome back to another update for gold and silver. Now since our last update, they've both edged slightly higher, both gold and silver, although they've hit a resistance area, so we might be starting to see a bit of a retrace to the downside. But before we go any further, make sure you hit that like and subscribe button to support the channel, and also reference the +1 videos to get a deeper dive into the trading strategies that we outlined today. In terms of the outlook, gold trades near $37.34 an ounce, silver around $44, both near multi-year highs and strong year-to-date gains. Gold up around 35 to 40%, silver slightly stronger at 40%. Key drivers: Fed rate cuts, weaker US dollar, safe haven demand. Silver also benefits from industrial and solar demand. Risks: hawkish Fed shift, stronger US dollar, or easing geopolitical tensions. Silver faces added risk from slowing industrial activity. Forecast: gold seen near 3,800 to 4,000. Silver in US $33 to $44 range with an upside potential. Outlook: gold steady with upward bias, silver more volatile but may outperform gold if demand holds. So first off for gold on the weekly, it just edged slightly higher since our last update, although notice the CCI is still showing a bearish divergence versus the price, so we're going to see a price retrace at some point, and it possibly may be starting any day now. That's the weekly. Bullish momentum on both the price and the CCI above the moving averages. On the daily, that's also bullish, although notice the CCI is broken into that moving average range, which is a weakening signal. So you might start seeing the price pull back. It's hit this resistance at 37.91, and you should have been going long potentially if you're trading this since that period back there. Notice as well, the reason I use these multiple moving averages is I like to see them separate like they did here. That would have been an ideal place to go long when they both started to separate and widen, versus this area here on both the CCI and the price. You'll notice there's a lot of consolidation. That just shows the price is undecided. So this could have gone either way, but eventually did break to the upside with those moving averages also breaking and widening apart. Notice also the CCI on the current period is currently contracting, so you might start seeing a bit of a retrace if that pulls back a lot further. But still cautiously bullish, but I wouldn't be going long until I started seeing that CCI break higher in the interim and see the price break through that resistance. Even if you're trading on the daily, we always trade in the direction of the higher time frame. So if you look at the hourly as well, just to get an idea of what's happening at the micro level. Now you'll notice here the CCI has dropped off and so is the price, and they're both fallen below the moving average. The CCI is into that moving average range, but still somewhat bearish at the moment on the hourly at least. Since our last update, and there's no divergence to talk of there. The last divergence we had on the hourly was back here, long-term one, slightly lower highs on the CCI versus higher highs on the price. That actually didn't fall back. Now it depends where you draw these Fibonacci retraces. I like to take it back to the previous low before that divergence started. So it would have been back here somewhere, and that would have been measured somewhere like in that range, and that's where it's drawn, a 23-38% range. Now in this case it failed to hit that range, and the price then started moving higher. So they don't always work, these divergence. More than 90% of the time they do hit this range, and sometimes in that few instances they do fail like I did in this case. So that's the hourly for gold. If we go to the back test, what I've got here is the CCI 14 strategy. Now what I've got here is going long from on the daily when it breaks above the CCI and the price. And that's where you would have gone long from that period back there. The reason I've given you all this back test here is to show you what happens. You would have done okay during that sideways movement there on the hourly, even though the daily was going up and down like a bit of a roller coaster. But notice you can also get the impact of a drawdown happening like it did here if you don't manage it properly. Now in this case you could have got out of it early at that point, and you'll notice there I've got, and that was during this period here on the daily. It broke above, but it also broke above there. In this case, when it broke above there, it closed down pretty quickly. Now you'll notice here I've highlighted the daily when it hit the moving average range on the CCI, and that happened to be when you had one contract open there on the 1 hour time frame. So you should have closed it out even with the contract open. That would have been your stop loss based on the daily. But also notice here on the 1 hour time period, you had a bearish divergence as well on the CCI versus the price. And again, once you start seeing the price break to the downside as well as the CCI, you would have closed it out there. That coincided with that daily break at that point there as well. So you should have got out there with possibly holding one contract open. So this is silver on the weekly first off. nice big moves above the moving averages on both the CCI and the price, but again notice the CCI slightly risen and so is the price, so that's still a bearish divergence on the weekly. So just always be aware of these divergences. And at the moment the screen's locked. Here we go. And on the daily, likewise, it's hit this resistance and potentially starting to come back. Now that since then the price has risen higher, and we just extend that trend line just very slightly, and the CCI as well. Now that's still slightly lower than that high there, so it's still a bearish divergence. I haven't drawn a target for it yet, but as soon as that starts pulling back towards that moving average range, we can expect it to hit the 23-38% range if it doesn't go any higher. So at the moment, I wouldn't be going long until I started seeing this break above that resistance area on the daily. On the hourly, zooming in for a moment, again, you'll notice there, since our last update, we had declining CCIs versus the same period on the price. That's a bearish divergence, and the CCI kept dropping. The price eventually started to drop as well. Now let's see if that's hit the 23-38% range, take it back to that significant low. You can see there it's just about to touch that 23-38% range. Eventually, there you go. Now, even that touching qualifies as a target hit on the divergence, but considering where the CCI and the price are at the moment, it may possibly fall further, but it's already effectively touched that range. Sometimes it just kisses it like that, other times it falls into that range, other times it falls right through. In this case, if this goes higher, then at least it's hit that. I don't trade these, don't go short during these periods, because you don't know where it's going to stop. I use them as areas to get out of long trades in this case, if you're going long, and as soon as you start seeing a bearish divergence, you may want to start taking your profits off the table. So that's the hourly for silver. And if we go to the back test, I've deliberately kept the back test here to show you what happens with the drawdown if you don't manage your trades according to the strategy. So during this period here, you'll notice CCI was below the moving average range, so you should not have been going long. And that shows you here what happens if you had in your account. I would have had a drawdown the whole amount and shown you complete drawdown of your account. But notice here as well, we had a bearish divergence versus high highs on the price. So as soon as you start seeing that's why I've zoomed out here. As soon as you start seeing the moving averages turning down like they did in that period there, you would have been wise to get out of the long trades at that point up there. Notice you didn't have any contracts open, so you would have got out nice and clean with a nice little profit at that point and avoided that drawdown. And what I've done now is set the back test to start trading from the 25th of August, straight after that period. So you would have avoided that area and started going long from that period. And that's where you would have ended up. Now, we had another bearish divergence here, notice. And that corresponded with that period back there on the daily. But notice this bearish divergence on the 1 hour time frame. You might have got caught out with a bit of a loss there. But as soon as you start seeing a bearish divergence, the first indication would have been that first spike. Let me just zoom in for a moment. That first period there, that would have been your first indication of a bearish divergence to that point versus the same period on the CCI. Now, you could have been conservative and stopped trading at that point because you're seeing a bearish divergence. That was a second chance you had at that point versus that period there. That was a second chance you had. Again, no contracts were open according to the strategy until such time as that point. That was another. So you had 3 chances actually to that point there. You had 3 chances to get out of the trade at that point. So you might have got out with a bit of a profit there as well with 1 contract open. Make sure to hit that like and subscribe button and share buttons. And if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.